In our previous Falcon content, which is top analysis using the Falcon strategy, we spoke a little about entries. We showed you guys how to filter entry when price meets your point of interest, which are the trend lines, right? And from the comment section, Forex Machine said to look more into candlestick patterns, which are what the pattern used for confirmations, right? So in this video, we'll be looking at what candlestick is, the components, and then types. And then finally, we'll be looking at examples of candlestick patterns that are used for entry confirmations. Candlesticks is a graphical representation of price movement within a particular time frame. All right. We all know basically what candlesticks are. You open the chart, you are used to the chart, you have traded, even if it's a demo, so you know what candlesticks are. Those stuff we use to analyze chart. That is what basically candlesticks is. And then theoretically, they are just graphical representation of price within a time frame. All right. So if you understand the candlesticks or know exactly what they are already, you know that each candlestick comprises of two things, all right? A wick and then a body, all right? So the body is just the rectangular side of the candle, the one that is looking like, filled up with colors, all right? And then the wick are just those shadows or that line that is attached to the candle, all right? That is what the wick is. So the combination of these two forms a candlestick. So basically, we know that in the market, what we do is either buy or sell, right? And we know that candlesticks are like the cells of the market, all right? So the beginning or the smallest unit of the market, this is what the candlesticks are. So since we buy and sell, candlesticks have its own type, right? Be able to identify that this is a particular, buying market or selling market. It has to show you from the candlestick what type of price representation it is given to us, right? So candlesticks are divided into two types. You have the bullish candlesticks and then we have the bearish candlesticks. All right. So the bullish candlesticks, I will not call it in terms of color because you can manipulate this color in your own trading platform, whichever way you want it. All right. So how to identify if this is a bullish candlesticks? What you're going to look at is if the closing price is higher than the opening price, it means that the candle you have or the candle that just closed is what a bullish candlesticks. Again, if the closing price is higher than the opening price, if you open low and close above, it means that candle is a buy candle or is a bullish candle. And then for the bearish candle, you just reverse, right? The flip. If the closing price is lower than the opening price, it means that price represents a bearish market or a selling market. So those are the types of candles we have. Just two types. Just the same way we have two types of direction in the market. All right. See that bullish direction or bearish direction. So the candles also either bullish or bearish. So for me, like I said, I'll be showing you guys the candlestick patterns that I use. All right. So for me, I have around 6 or 7 candlestick patterns that I personally focus on whenever I'm using the candlestick for confirmations. All right. So we are going to look at the first 3 in this video, and then in the next video I'll be bringing the remaining ones for us to understand. Okay, candlestick patterns are just structures or patterns formed by one or more candles that help us to know or make the final decision, either to enter the trade or to let that particular structure play out. All right, so like I said, I'll be showing us 3 of these candles in this video just to keep everything short, and I'll be explaining them what they are. I'll be telling us the psychology behind them, and I'll be showing us practical examples on the chart. All right, so the number one candlestick pattern we want to look at is the hammer. A hammer is actually a bullish candlestick, right? It signals a rejection from the bears to the bullish ends, or a reversal from a bearish trend to a bullish trend if it is identified where it is supposed to be identified for us to know, combine it to make a particular signal. All right, so the hammer candle is created when the open and the close are roughly at the same price. It has a long shadow, a long lower shadow that helps us to understand that it was rejected from the sellers because they were trying to pull it down, but it rejected upward. All right, so that is what a hammer is. So let's hop on the chart and let me show us a graphical representation of a hammer.
Alright people, so one of the things I mentioned when we were talking about types of candle to know if it's a bullish or bearish, I did say when you want to understand the type of candle is you have to look at the open and the close. Alright, for the bullish, it opens where it opens below and closes above, meaning the price increased. That means it is bullish, right? And then for the bearish, it opens above and then it closes below, meaning the price drop, and it is what? A bearish candle type. Now, if you want to understand what a candlestick is, or if you're looking at candlestick pattern, sorry, if you're looking at candlestick patterns, the color doesn't matter, all right? Where it opens and where it closes doesn't matter. What matter is looking at the length of the wick. All right, so the length of the wick is going to tell us what momentum the candle is. All right, what momentum. So when we look at candlestick pattern, especially the hammer, we look at what momentum to be able to identify a hammer pattern. All right, so for instance, the first example here, just like we said, what if we look at the open and close, we are going to know if it's what type is going to be bearish or bullish. You can see clearly that this is a bearish candle. Obviously, also from the color selection here, the red one are the bearish candle, but it is also a hammer. Why? Because of the momentum from the candle. All right. So you can see that the wick of this candle, this wick, is so long compared to the body, right? So it means that price open above here, right, came way all the way to this low here, came low to this level. But because the buyers are battling the price, they did not allow the price to close there or even, larger like this one. They brought back the price up till it became very, very close to the open. All right. So the fact that the buyers were able to battle this price from here back to where it closed, which is very, very close to the open. It means that the buyers are in control, despite the fact that the candle is a bearish candle. This is a hammer. All right. Despite the fact that the candle is a bearish candle, it means the momentum here is that the sellers actually fought, but the buyers won. That is why the week was this long. So the longer the week, the more we confirm that the buyers are what in control for a hammer pattern. So this is the hammer, and you can see how it looks, right? So if you look at more example, you can see for the hammer, price was what trying to pull back down. The sellers were trying to bring price down, and after the hammer was formed, you can see what consecutive bullish market, and you can see how much price bought to the upside because of this hammer. All right, so let's look at the next hammer and see what it has to say. So you can see this hammer. For this hammer, it is a bullish candle. Why? Because the open is below and the close is above, right? But where our focus is where our focus is what on that wick. It is the wick that confirms it to be a hammer. All right. The wick have to be very long. All right. Compared to either the wick at the top or even the body. So the wick below have to be very long. Meaning price open here, right? Came back down to this level. Came back down. But price refused to close here. Price didn't close here. Price pulled back all the way above our open and went to close above, right? It closed above very close to our open. This is why it is a hammer candle. And you can see also from the hammer, the physical hammer we use, this is like the handle of the hammer, and then this is the hammer head or the hammer, whatever. I don't know how you call that, the head or the hammering iron. All right, so this is the hammer itself. That is why it is called a hammer pattern, because it looks like this is the handle and then this is the hammer. And also that hammer that we use physically is that you have to remember that the handle is always very long than the body. All right, the handle is always long. All right, so the length of the rejection from the downside tells us if that is a proper hammer or not. So you can see also we have what another hammer here. Price rejected from the downside. Price opened below here, came back down. The sellers drag it down, but again it's rejected until here, and then you can see how it is formed a good hammer. Now you don't know what a candle is until it closes, so put that at the back of your mind. So you will always know if it is going to be a hammer. The moment it closes, you always know if it's going to tell you that you should yes buy or no. So the moment how we trade is like, okay, if you are trading support and resistance, right, you can see here is the previous bounce off zone, right? And now we can have this hammer. We also have this hammer here as well. So we have this hammer, press close above. The moment this hammer closes, we just open the trade in the next hammer, the next candle. So that is how the thing is done. But I'm going to talk more about that, and if you want to understand more of that, please say it in the comment section so that I can be motivated to create a content about that. So you can see after the hammer is formed, you can see how much price shoot up. You can see the consecutive bullish candle that what shoot up from where we were, or immediately the hammer was created. So if I'm to go over to a lot of example, you're going to see more and more of it. So we have price came down, price went back up, close above. This is a hammer. All right, I use different examples so that you can see when you see different types of them on the chart, you won't be confused and be looking for that particular one that I showed you on the just picture or something. So this is a live chart. You can see this is what a hammer as well. This is a hammer and that's a hammer. So let's use GPJPY to identify a few more hammers before we move to the next example. Alright people, so this is GPUSD and we can see we are having what similar examples just like we had on the synthetic index pair. So you can see here price was trying to drop, and then after the hammer formed, you can see price what gave us it will, good bullish run to the upside. Also you can see this hammer here. Like I said, the hammer doesn't it is not concerned with what, with the candle color. Alright, the candle color or the candle type doesn't make it a hammer. What makes it a hammer is the amount of rejection we have. Alright, so after the hammer was formed, you can see we have a bullish run to the upside. Here is also, this is a hanging man here, this is a hammer as well. So this is the hammer, and you can see it was sponsored the continuation of the bullish run. So that is literally what hammer is, and that's what they do. Now remember that you cannot use these candle patterns on just anywhere you see them on chart. So you have to combine your analysis and combine your point of interests with these chart patterns to be able to make effective decisions in the market. Let's go to our number two.
So the second pattern we'll be looking at is the shooting star pattern. I did say that we have types of candlesticks, bullish and bearish. So for every price pattern, right, for every chart candle pattern, it also have what, it has two types. One is for the bearish end, and the other one is supporting what, the bullish end. So the hammer is for the bullish end, right? It gives us reversal from the downside to the upside. It indicates time for buys. All right, now the shooting star is like the opposite of the hammer, which indicates a reversal time from the buys to the downside. All right, so it is just like I said, opposite of the hammer. It is also graphically opposite of the hammer. So let's hop on the chart and let me show us what the shooting star is on the chart.
So guys, just like I said, shooting star is just the opposite of a hammer. All right, just the opposite of a hammer, because it does what, it moves the market from a buying structure to a selling structure, or from a buying strength to the bearish to the selling strength. All right, so you can see we are having this bullish movement here, and immediately the shooting star formed, it what, sold drastically. Just like the hammer, what tells us that this is a shooting star is what, the level of rejection from the upside. And we have already said that shooting star is what, direct opposite of what, the hammer. So the rejection from the upside, the amount of rejection from the upside tells us if this is a shooting star or not. The color doesn't matter, the type of candle it is doesn't matter. If it's a bullish or bearish, it doesn't matter. What gives us that what tells us that this is a shooting star is what, the level of rejection it had from the bullish ends. All right, so this is a shooting star. You can see price was coming up, and after the shooting star you can see how much price sold downwards. All right, so this is another example of a shooting star. You can see also the rejection here, massive rejection. When we had the rejection, price closed what, below its open. So price open here, price closed below, and then after the close you can see how much of a drop we had on this particular structure. This is also a shooting star. And finally, for the shooting stars, this is the last shooting star for today illustration. So you can see we have what, good rejection from the upside, and we have a good closing, we have a good bearish closing, and after that you can see we have what, a long sell to the downside. That is a nice shooting star. So guys, just like I said, the color of the candle doesn't matter, the type of it, if it's a bearish or bullish, doesn't matter. What matters when you are identifying these patterns is what, the momentum of the candle. So this is a bullish candle, right? This is a bullish candle. Price open below and close above. Also obviously from the colors, this is what, a bullish candle. But you can see that this is a shooting star. This particular one here is a shooting star. This green candle is a shooting star. Why? Because the amount of rejection we had from the top is so great compared to the body, right? So this is a shooting star candle. So though it is a buy candle, the buyers took it up here, but the sellers still fought it and brought it down to this level. So the fact that the wick is longer, or the length of the wick is more than the length of the body in which the buyers are maintaining it, it means what, the sellers are in charge. And the fact that the body is below here, it means what, it is a shooting star candle. All right, and after it was created, you can see we had what, a drastic sell to the downside.
So the final pattern we'll be looking at is the engulfing pattern. Engulfing pattern is when a candle fully engulfs or is larger than the previous candle. All right, so the high and the low of that engulfing candle should be higher and lower than the previous candle. Let's hop on the chart and let me show you guys.
All right guys, so engulfing pattern. So just like the previous pattern we looked at, engulfing pattern also have two versions, right? The bullish and then the bearish one. Currently what we have on our chart is the bullish engulfing pattern. All right, So it is a bullish engulfing pattern when the engulfing candle, the candle that would closes both above and below the previous one, is a bullish candle. And then flip of the coin is for the bearish engulfing. If this particular candle that engulfed the previous one is a bearish candle, then it is going to be what? A bearish engulfing candle. Now our focus is going to be on the candle that engulfs, right? The previous candle, whatever it is, it doesn't matter to us. Even if it's a bearish candle or a bullish candle, it doesn't matter. But the candle that engulfs, if it's a bearish candle, then it is what? A bearish engulfing pattern. And if this is a bullish candle, it's a bullish engulfing pattern. Now, number two thing to take note of is that the structure of this candle doesn't matter. This candle might be a whole body like this with little wicks like so at the top and the bottom like this, and engulfing this one. It is still a bullish engulfing pattern, alright? It might be a pin bar and engulfing this one. It is still what? A bullish engulfing pattern. It might also be something like so to the middle and then maybe having the wick equal at both sides, it is still a bullish engulfing pattern. And the same with the bearish engulfing pattern. The structure of the candle doesn't matter. Since the highest point of this week and the lowest point of this week is engulfing this whole candle, it is what? Engulfing pattern. And then the color will tell us if it's a bullish one or a bearish one. So as you can see, all of these are bullish engulfing structures, all right? So let's zoom in one by one and let's look at them and how they have operated. So like I said earlier, the structure of the candle that engulfs doesn't matter. You can see this engulfing by here having what? A doji formation, right? This is what it's called a doji, kind of like uh, you know, having the wick equal at both sides. So this is still an engulfing bar, right? Engulfing pattern. Why? Because the highest level of this week and the lowest level of this week is what? This previous candle what is engulfed by it. So this pattern is still what? An engulfing pattern. After a bullish engulfing pattern, which would signals a reversal from a downtrend or a down structure to a bullish structure, you can see that after that engulfing pattern or engulfing pattern, price bought significantly to the upside. All right, so that is the advantage of a bullish engulfing pattern. It changes the sellers, it signals that the buyers are now in control. All right, so also you can see this one is what? A full body engulfing candle. It has a lot of body compared to the wick, and then the previous candle behind it also is a bearish one, but the previous candle behind the engulfing candle doesn't matter. The focal point is on the engulfing candle. So this is also a bullish engulfing candle. Why? Because the candle that engulfed the previous one is what? A bullish candle. This is a bullish candle. All right, so we can see after the engulfing, after the bullish candle that engulfed, you can see what? Price bought significantly to the upside. And finally, for this guy, you can see it is looking like a pin bar, something like that, but you can see that the candle that engulfed what? This candle is what? A bullish candle, and it is engulfing a little candle here. This candle that is being engulfed, the color or structure doesn't matter. What matters is what? This candle that engulf it. So the highest level and lowest level of this candle is what? Is engulfing this previous one. That's why we have what? This bullish run to the upside. That is it for what? Bullish engulfing pattern. And for the bearish engulfing pattern, like I said, it is just a flip of the coin for the other side. If the candle that engulfed the previous one is a bearish candle, then it is what? A bearish engulfing structure. So let us see from our examples here. You can see the first candle that was what? The first example we have. You can see that this candle, this green candle, which is obviously a bullish candle, right? You can see the highest level of each week is here, and then the lowest level of each week is here. And you can see that our bearish candle, the ginormous bearish candle, is what? Engulfing all of it. So this is what? A bearish engulfing pattern. And you can see after the bearish engulfing pattern, you can see what? Price was at first coming up, and then after the pattern was formed, you can see price retraced downside and sold drastically to the downside because what? A bearish engulfing pattern was formed. All right, meaning what? The sellers have come to take over. All right, also here you can see what? We have a buying momentum candle. All right, if this was sitting at the right place, I would have called it a pin bar as well. And you can see that what? This guy is what? Engulfing the highest level of it. The wick here is higher than the highest level of this candle. Then the wick here is lower than the lowest level of this our pin bar that is what? Being engulfed. So this is what? A bearish engulfing. And you can see that what? Price was trying to give us a little battle upward, but after the engulfing, we sold with this ginormous momentum. You can see price sold drastically to the downside. That is what? Example of a bearish engulfing candle. And finally, we have this bearish engulfing what? Pattern here. can see the candle before is a bullish one, but like I said, the candle before doesn't matter. The candle that is the engulfing one, if it takes the highest level and the lowest level of that previous candle, then it's what it is confirmed to what have engulfed it. So the candle that engulfed the other one here is what a bearish candle, so it is what a bearish engulfing structure. So we have it to the downside after engulfing. You can see it gave us a good sell scenario. So when you see engulfing patterns, it tells us what the buyers are what having less strength, and then the sellers, bearish engulfing patterns tell us that the sellers are now in charge. The bullish engulfing patterns tell us that the buyers are now in charge.
Thanks for sticking to the end of this video. I hope it has been impactful and helpful. Practice before implementing it in your trading. Like I said, in the next video, I will be giving us the remaining candlestick patterns that I use. Thanks for watching and stay highest.